Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, guys. Welcome back for another week of my episode. It's getting a bit boring so far with the financial news and services at the moment. It's not going anywhere. Dow Jones is basically going sideways most of the week. And essentially, it's up 1 week and down another day or something. 1 week up and things up. Just rather boring, overall, like on Monday, the Dow Jones was initially up and then turned down 400 points because, you guess it, the stimulus package. So it's more like, give it to me or not give it to me kind of thing. It's tick for tat. You've seen the White House and then the Senate and then the House and also things. So this political TikTok before, toughing between two sides, so to speak. But I think definitely there will be some stimulus package, but who knows when actually coming over. But whoever's stopping that stimulus package probably will get blame. So I think both sides will try to get something out, but I don't know. Pelosi seems to be. Nancy Pelosi seems to be not really cooperative with Donald Trump or something. So I don't know what's going on over there, but I just hope the stimulus package come out soon so that the normal American middle class can get some help from the government. Then also China on Monday started to basically allow its own citizens to queue up for some vaccine. Basically at the moment in China the vaccine is in the late stage of testing, but they at least started to go also sharing with other towns within the country rather than only the people who got sick. So it seems encouraging, but still early stage yet. But it's cost not too much, $300 Chinese dollars, which is about 20-30 pounds at a go. You need to do 2 injections, but at least it's available, so that's good. And then Tuesday, the market sort of like gone back up again, 100 or 113 points and things like that. And there's also, again, hope of stimulus package. It's just this is what I'm saying, just go up and down, up and down. And similar on like Wednesday, then we got like, the up a little bit, and then Thursday up another 100 or 35 points, and then Fridays up another. I mean, they've gone down to like 150 points initial, almost 200 points, I think, and then only back up to like 30 points. So the market in general just up and down, yo-yo. But outside of financial services, there's some news that's coming out that's possibly a bit more interesting, and to me, definitely it is anyway. So, like I said before, the COVID-19 drugs, vaccines are available in China and testing it, and I think Brazil is also looking into approve internally to buy some. 400 or I don't know how many doses, but it's like quite a lot of the dosage to test in Brazil, alongside with the British one from UK with AstraZeneca and Oxford University. But I think that one's got hold a bit because there's some advert effect on older people. But I'm sure have similar issue with COVID-19 vaccine in China. But I think overall, what they might be more advanced on that one. But we remember China is on the COVID or SARS related disease has a bit more experience than the Europeans, and they don't just rely on more drugs like scientific drugs and created drugs, that kind of thing. They're more like have traditional medicine. They use a lot of herbal medicines and stuff. They have the experience of the SARS, and hopefully, I mean, that gives them sort of like a legs up on the vaccines and stuff. But let's see how thing goes on that. There's probably hopes, and the news from Asia is it works well in China. They probably will share it with the world and just ask for the basic cost, basically the manufacturing cost, and just ship it out to people, and then let them try. So we just see how it goes. But on Tuesday, I mean that. The other news is really much like U.S. Telling Germany to basically back off on this Nord Stream 2 pipeline, which is about 93% of ready, and basically just say, this could just basically a security risk for energy risk for Germany for relying so heavily on on Russia and should buy from U.S. Blah blah blah. Even I talked about it a couple of months ago, I think, or maybe a month ago. Even Germany. It's basically offering America $1 billion US, basically just keep quiet, get our way, don't come over and bullying us, that kind of thing. So like as far as I'm concerned, mafia protection money. You don't. America basically say you don't do this, and I'm going to sanction you, and it already has. It sanctioned some companies in U.S. who are dealing with the pipeline for supplying things to the pipeline. It sounds very much Huawei thing, isn't it? But this time instead of to China, it's doing to Europe. Basically Germany, the big powerhouse within Europe, and yes, buying things from Russia, not China this time, but still bullying them because U.S. storm enemy at the moment is Russia and China, right? So that's what Trump is doing, bullying his own friends. Germany is not just any other state. Is friends and allied, and basically tell them, don't buy from Russia, buy from us, even though the pipeline thing's already done 90% it's more or less there, and the gas is cheaper from U.S. and it's not from thousands of miles away. The pipeline's already set up. And Russia basically is it's two things. You may not like them, but they're very business minded, just like the Chinese, just like anybody, or just like Americans. And basically, what it looks like, American looking at it, or the Trump administration looking at this deal and say the gas should be coming from us, to help its own sell gas and whatever gas industry within America, then give it to Germany to deal with Russia and try to bully Germany to do things. But I think Germany basically just pushed back and just really, really is very upset about this, and basically just say, get away from this deal. What U.S. had nothing to do with this. It's two sovereign nation, just like two people buying things. A third party coming along and say, don't buy from this person, buy from me, and then it's already, the deal is more or less there. And when it's suddenly coming, buying from us and threatening, and then what was that? To me, it's very much mafia. If it's if U.S. is very much a capitalist country, then they should just when the bid comes out, put on the bid, and then let Germany to decide. Germany, in this case, I believe, is just selected Russia because the price is good, the cost is lower, and constant supply from somewhere local. This energy security thing or supply thing has been raised ages ago, but overall Germany is Germany. They have their own thinking, their own people, own parliament, own country to think about what is good for them, not what is good for America or the world. It's what is good for them, just like all the other countries will think for themselves first. And they think this cheaper deal to get gas from Russia than from the US. And this is just whatever. It's people just exercise the independent thinking. And why the hell US go around and just bully Germany to try not to do this deal? Just beyond me. Just very much like U.S. going around the world telling people don't buy from China because coronavirus, blah blah blah, they have to pay, and also don't buy from a Huawei, security risk, which I will come on to later on. It's just a bit of a joke as far as I'm concerned. And it just basically just say how much basically people just keep on U.S. when U.S. bullying others, the world don't seems to say much. It's okay for U.S. to go around telling other people what to do, and when other people tell U.S. what to do, you are just telling two fingers to others. It's weird. And also, funny enough, you look at Joe Biden and Donald Trump's campaign. I haven't seen lately anything about that foreign policy. It's very much like COVID-19 handling, Joe Biden's latest leak about sons dealing with China or something, and it's kind of funny as well that comes out right 3 weeks ago, to almost just 2.5 weeks to go before the next U.S. presidential election, and it just come up on there, and that's just beyond me. Basically, this is what you call dirty politics. Why do I think this came out? Apparently, this information from Biden's son's been around since August, but didn't come out until couple of weeks before the general election when Donald Trump's already have it, or his lawyer or something has it. I mean, it's all over the news in Australia. If you look at YouTube, ABC News Australia, you probably find a lot of information there. It just basically just see how dirty politics is, and just basically just kick your opponent, that kind of thing. Then also during the week on Wednesday as well, Cathay Pacific cut back in Hong Kong. Basically, its flagship airline. It's basically cut back staff. I think 8,500 people, and some of the cheaper brand like the low cost flying brand, I think is Asia Dragon or something, is basically they stopped running that one. Basically just try to reduce cash burn and kind of thing. And Cathay Pacific got lots of major China investor in there, and Hong Kong government also took a stick as well, tried to keep it still running, so to speak. But yeah, cutting back is inevitable. I think this is the case for around the world. China have its own issue as well, but at least internally there's a lot of traveling going on. They can sustain it, and also externally at the moment not much. But China at the moment at least have try to feed themselves with its own internal consumption. But for other countries like UK and Australia, Canada, and US specifically, it just not if those industries doesn't have the government backing, it's just going to have a lot more unemployment, and it's basically coming. And on the other hand, how much can government help? It really very much limited. They can give you stimulus package once, twice, maybe 3 times, but it cannot continue forever. So the best thing to do is try to kickstart the economy. But the COVID-19 is spreading, and people worry about it, scaring about it, whatever your view is on that. But until the economy is back up again, people start working. The airlines basically will suffer. Internal traveling may be one case, but then external travel, international travel, basically cut back a lot, and they're just not good. This indirectly affect international traveling on hotel bookings, international hotel bookings, business trips, Airbnb. And I read somewhere that basically Airbnb might have a secret IPO, even though it's been stopped for March because of the pandemic. I think they still want an IPO, but I think the price probably come back down a lot more now. But those are the type of things that happens as well. And also during the week they're talking about, I think on Friday, with the new house sales and also the unemployment figures coming down, that kind of thing. But on new house sales, people are basically buying more in America. And basically, I think it's very much similar to me here. People who still have a job, since they can work from home a lot more. Look at Google and Facebook and Microsoft. They are talking about quite a lot of maybe permanently working from home, or allow people to have that option. So if that's the case, especially IT-related stuff, all you need is good internet connection. You don't really need to be in, like San Francisco to suffer high rental costs and so kind of thing. People the renters, and even people who have a house and just move to the countryside or somewhere closer to maybe the friends and families, and also in a much cheaper rate, and they're still making the same, salary. They still have the job. They basically just a better balance of life and work, so to speak, and it's also cheaper for outgoing costs for either accommodation is as a renter or as a mortgage or loan from the banks. But definitely that's sort of going around, and then that sort of helps them a lot as well. So this is those kind of things actually happening, and so people are basically moving away from those, and look at those. This is an effect on big cities on the renters. The rental landlords like myself. Luckily, I don't have too many rent houses, but the student accommodation still strong. But other people, from what I heard, is having problem because a lot of them haven't got enough jobs, basically, because the cutback, was basically the lockdown, and then people don't go out much, and then restaurants just couldn't take it anymore. So I think the hospitality section is really suffering, and it's the case in US, it's the case around the world. And you go down to town, your local town, and you see a lot of to let or empty shops available basically in your own high street, and that causes issue to the landlord who couldn't get people to rent the place, and that indirectly affect their way to pay mortgages, and then that indirectly affecting the banks, and that's just more for rental for like accommodation, but also for the high streets. And that affects the banks and as well as the pension funds who are into renting to professionals, renting to students, and also people like REITs, renting out shops, shopping centers, that kind of thing, because of cutbacks and lockdowns, job unemployment problems. So I think all of that's like one chain to another, link to another, and that's why Warren Buffett is sort of offloading his bank's position, because he can see a lot more of these things coming. But for Warren Buffett, it's not laughing matter either. The slowdown in consumer spending definitely hurt all his business, like Coca-Cola and things like that. But banking is one thing, but also his reinsurance, like insurance for cars and stuff, insurance and reinsurance, because people just don't have the money. Secondly, to COVID-19 deaths, significantly higher in America than the rest of the world. I'm sure, just logically thinking, a lot of them probably bought, life insurance, that kind of thing, and they probably have a lot of the insurance company have to pay out, and Warren Buffett is into that area, so I think probably affect him as well quite a bit. So moving on, the next one is, obviously there's another ban from Sweden saying don't buy from Huawei, just following whatever the the US is saying to UK and Australia, that kind of thing, and to France. So to me, this is just basically just another, just like before the COVID, the Nord Stream 2 thing in Germany. To me, I just feel it's sort of like bullying a bit to the Chinese from US to tell others of his mates basically around the world to tell them don't buy from Huawei. But it raises a very interesting question. This is a country, US I'm talking about, who has been found out, that's been listening to other people by Edward Snowden. That he's been secretly listened to his friends and allies as well as his enemies, and Germany in particular too, and so is UK and other thing, and then is also in the CIA in America is a lot of got in bed with Swedish company, and basically this Crypto AG or something, back in February or March, if you guys remember, they got in bed with this company selling encrypted machines that a lot of countries' consulates are using, sending confidential information back and forth between the countries and the consulate and its own, places and staff. And U.S. is listening to other people. So U.S. in general, to me anyway, is the one who spy on the people's core most than anybody else. But then you have the guts and nerve to say, tell China, bugger off, telling the world that China is listening on them. I mean, to be honest, everybody's listening, and China is no different than others. And U.S. the biggest one. I've been listening to people around, and to me, I have a bit something to say about the mobile phone things. If you look at, you have heard my other podcast, you know that I'm a software consultant. I do mainly on a mobile communication side of things, or mobile provisioning, so what they call the OSS, operation support systems, that kind of thing. In the backbone, the background, the network, how things talks about the main core data they've been sending around, that kind of thing. So when I was in Bulgaria, when I was first contracting in Bulgaria, working in some company called FIFA, called FIFA now, basically helping them to launch the mobile phone network. One thing I got to know is Huawei was there. And then when I was, obviously because I was doing a lot of network communication, software design, provisioning stuff, I look at the Huawei documentation, and the first time I look at it, I just say, it looks like very much like old style Ericsson software communication. The interface, documents, everything else very much the same. And even in Bulgaria, there was a network director who was from Ericsson. They basically pinched him, and I think he's Eastern European anyway. He basically, I think he's Bulgarian, and he basically just started out off in Vivatel for Bulgaria. And he is from Ericsson. When he looked at the document himself, he said, "Yeah, it's just probably borrowed. They just basically the word borrow from from Ericsson." So China, Huawei has been. I mean, from my own experience, have copied other people's software. That is unfortunately event that's the case. Just from my own experience, and there's no doubt about it. And the other thing also, Huawei is cheap. On the other hand, for cheaper than Ericsson, cheaper than Nokia. The software might not be the very best, but at least it's cheaper. And then when they need to deliver something, basically the Chinese firm just throw loads of people onto it. But that was like 10, 15 years ago. And obviously things have moved on. So I'm sure that Ericsson feel the pain from Huawei, taking on the networks space and stuff, and now on the mobile side as well, mobile phone handset in any case. So yes, in a sense that China is copying things, but it is similar to what Japan have done in the past when they selling the hi-fi, the cars, the electronic stuff when they was back in the 80s. I'm sure they have done similar thing. I remember those they have, but they just moved on to more high-tech stuff to have their own internal more what you call development and innovation, that kind of thing. So, but this kind of thing is not new. And it does happen. But also the other thing I think of is, if you look at security kind of thing, from my point of view, this Huawei has been selling equipment for quite some time, and it's not just in Europe, but also in America as well on the fixed line, and in Southeast Asia and things like that. People get into it because it's cheaper, and a lot of people think of the bottom line. A lot of companies, they are doing that. But so is Ericsson. It's working in conjunction there, so as Nokia, fighting for the space there. So if you say China Huawei equipment a bit dodgy, which in my view it is, that kind of thing, because they're using older code pinch from other people. They're a lot more security concerned. I also work in Virgin Media in the UK as well, so that sort of show the working on the IMS and stuff side of delivery with Virgin Media stuff. It is also getting a lot of flag on that because a lot of bugs and problems, because the stuff are not as good as what we're expecting. But they to be honest, Huawei put up quite a lot of work on it to try to fix the problem. So they're pretty good on those things. But if you look at Huawei's pinching things from other company, yes, it does have a security risk because they're using older version of software. They're innovating, they're getting better, but they are still potentially have a lot of software holes, so to speak, and potentially open to other people to hack onto the system. So that is one thing on the other one. On the other side is Huawei has been around for quite some time, right? It's not just been around for 5 years. It's more than 10, 15 years. And people have been buying it. And only now, somehow, since Donald Trump sort of gone into power and saying so much about Huawei, equipment is a bit dodgy. People knows about it, isn't it? This is sort of like an open book secret. People knows that Huawei's code looks very much similar to other people's code, but they are significantly cheaper, and they are willing to work at it, to make things better. And at this day and age, this money talks, bullshit walks. It is cheaper. So what happens around the world? People start using the equipment, and they are innovative, they are getting better, and at the end of the day they are coming out with better equipment at a better price. And what are you going to say that the rest of the world shouldn't actually use it? It's up to each individual country to think of how secure the equipment is. Like I said before, similar to UK, we have something called a BT lab. You can just put all the equipment there, basically just test it out. The telecom watchdog, I think they suggest that as well, have used that to basically go through Huawei and test the equipment to make sure that there's no leak of security issue and stuff. There is, obviously, like I said before, but something that Huawei is willing to address. But UK can basically just test it out to test that to make sure that it's not talking back to China or sending information to China or so this kind of thing. Well, there's way to limit it, but to actually basically just say because Huawei, because it's Chinese equipment, and you just go around and basically stopping other people, other country using it, and UK and Australia sort of follow suit is a bit of disappointment, because I think they can make their own case and think of it, and then at the end of the day it's down to the money. Okay, maybe a lot of politics as well, but then it's like, okay, if you don't use the Chinese stuff, it's cost lower. You go to Ericsson, you basically have a similar situation. Can you trust Ericsson and Nokia kit? And it's about the trust as well, and as well as cost, and they are cost a lot more. And Huawei kit are definitely more advanced on 5G kind of thing, and so forth. So it's basically like up to the company to actually take it, or the country to take it. For US to come around bullying other people to say China is bad, fair enough. If you do that, fine. But basically just stop a source of good equipment. And 5G, Huawei on 5G is definitely much more advanced. I'm not sure about the other one, but 5G is on that fast, much better. You can go to China and have a look yourself. So communication is quite better in both cases. But also the other thing as well, this rejection of the Huawei kit and stuff. Huawei is quite big in Asia as well. It overall is still generate basically a separation of different technology right around different countries. America has been well known, even for European countries, try to break into American market. Their network is different. Okay, that's why you have a dual SIM phone. Basically, you go to US, you have used different frequency and slightly older technology, in my view, than Europe and Asia, and they basically are not much more advanced, that kind of thing. So people use dual SIM phone to basically connect to both, Europe standard, European standard, as well as American standard. And American has been quite closed on that one. They don't really want to change much, that kind of thing. So if Huawei, as it is, like we said, continue with being strong on 5G, basically all we see is Asia and which country who take Huawei. Okay, they have to adjust to this and stuff, but you can see technology-wise, you probably move far ahead on 5G than Europe as well as America. So basically, it's a balance between you want the latest technology to move your economy further or possible risk, but you remember, this is a country, US is the one who has been listening to other people all the time. Edward Snowden, remember? WikiLeaks and all those sort of things. And for the big country, US, sorry to all these US listeners, but the US government to come on and say China is bad or Russia is bad, when everybody is doing it, it looks like maybe US got caught most of the time, but there seems to be the biggest listener who is listening on other people, not in a good way. So for US to actually tell other countries to China is bad, US is just as bad in my view in those cases. But that's what I think on that front. The other things is of course the other thing people need to watch out is how Huawei is saying things as well. On Friday they issued the new sales account thing. It's up about 9% for the handset and kits, but yeah, of course COVID-19 is affecting, so is the US sanction affecting them, but China is not going to stop developing for its own use. So 5G is going to move on, and Huawei is the biggest internal within China. It's just going to continue to move. But what they also said in Friday is they will continue with 5G, artificial intelligence, cloud. And now, cloud obviously for fixed line and mobile phone, fine, is cloud anyway. A lot of people using cloud and stuff. But if you put the mobile phones together with that mix, and some people already talk about in Asia, it's very much like like your mobile your laptop or like Chromebook. You don't really need all this hard disk and stuff and so forth. Everything's in the cloud. You just do that, and then the machine is much cheaper. Okay, and also the technology used could be at a lower grade. And I mean, if Huawei moved that way, okay, they might not have the latest technology or newer phones, frankly thing, but if they move that way, then that means they don't need the higher running chip, high performance chip, and they can use a lower end technology kind of thing, while they give them time to internally develop, to use their own, design. I mean, Huawei's design is always been, it has been bad before, but it's getting better, and it's much better nowadays on a mobile phone handset especially. And my experience directly is on the equipment side, the network equipment side. But the handset seems to be, much further than a lot of countries, and it's doing well. So I would basically just say this. I mean, if they move that way, using cloud technology a lot, what Jack Ma talked about, big data, the handset, they can increasingly just moving back into maybe a lower standard, less speedy, faster chip, and then continue that way, sell internal within China, but also to other countries as well, because lower cost will be another attractive point for them. But the biggest loser for all this stuff, if Huawei continue to grow as is planned, and 5G stuff and handset stuff, is the US and UK and European chip maker, the microprocessor chip makers, that kind of thing. They can sanction whatever they like, but China is going to move ahead. And this is a lot like what he's saying on, I think Xi Jinping have gone to last week, I think went down to south of China, and Sichuan is 40 years celebration or something. And he did a couple of speeches and stuff. I'm not sure if you actually did hear them, but it's on YouTube. You can hear them. But essentially, what he's saying is China's going to continue to invest in its own infrastructure, and then our technology, 5G, is going to be pushed internally. They don't care what other people say; just continue to make sure that supporting its own internal consumption. I mean, it have learned this from rather bad way. So in 2007, 2008, American produce, recession during subprime. In my view, part of my language, wrapping dog shit and cat shit in sweet paper and sell it to the road, and telling the world this is lovely gums or sweets, when they find out later on is full of poo inside them, and that's what's causing the recession, so to speak. So part of my language on that. But China learned that when the rest of the world that is exporting partners having a big deep recession, it can't rely on export anymore. So it have built its own internal consumption for the last 10, 15 years. And we've seen that, this, Alibaba, this single day, that kind of thing, keep on internal sales for single people. They keep on buying things. These Black Friday things, it's basically, it's there, but China's doing much bigger and much more. And you can see the rise of the middle class, that kind of thing. And internal consumption basically just keep on increasing. And China is importing more than it's exporting at this stage. Export, as far as I understand, is between 20-25%, and that's export to everywhere. Not just US, to every other countries. And on that front, it's much to, internally, what China is saying is, we need to, keep up the good relationship with its own partners and its external countries and stuff like that. But with so much problems from the US pressing on them, and as well as Australia, UK, and so forth, and people talking about COVID-19 payback, blah, 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 kind of thing. China's just going to be, 100 years ago was weak in the Qing dynasty, and let people just bully them. They were internally just going to be rise up and be self-sufficient more than that. So people really need to take that into account to think of what China is actually doing. However much you don't like the system government-wise or whatever, but in China people are more getting more better living standard due to globalization. The last 30 years that you've been in China, you see what it is now. And back then, probably Jim Roger can tell you so much changes. Ray Dalio as well. Whoever has traveled to China a lot from US or from the West can see significant changes in China, and it is enjoying a better life standard, living standard, and also middle class is really rising up, and there's a hunger, basically internal consumption. It's very much like the baby boomers, where they have children, educations and travelings, better lifestyle, that kind of thing. It's just big lump of people in America driving, the basically people's lives, changes because of the so much demand from America, so to speak, and driving force to around the world on technology, on films and music and traveling and so forth. And it'll be the same thing for Asia, and I believe not just China, India as well on that front. But I think China definitely will have better start, so to speak. Now, then all these people need to think of is, what China is doing internal consumption. That mean one thing: it will buy a lot more thing than exporting, and thus, pissing off China. However much you don't like China, country around the world need to think: do they want to sell things into China or not, or just keep on saying China's bad, and isolate them? From what Xi Jinping actually saying, it doesn't really care what other country will do. We still want to keep a good relationship, whoever wants to work with them, and want to have his internal consumption to basically better themselves first than to care about other people. Yes, that's the way it is. So people need to think of in general as a investment. I think a long-term thing from my view is China is like the warring 50, I don't know what they call it, 50s or whatever, when the baby boom was happening in U.S. and driving the world demand, so to speak, because of his baby boomers, growing up years, kind of thing. Similar thing will happen in Asia, in China, as well as in India. So, and basically, people in general, if you want to invest overall, I think overall is investment into China is just look at those. Study what happens back in the baby boomers when they grew up using stuff, and just project that similar things will most likely, in my view, happens in China in a different way, of course. But it's driving the technology, driving the consumption, driving the needs for brands, driving for like news and entertainment, music, and technology as well, and that kind of thing, and cars, and demands basically just driven from there on, and the rest of the world who want to supply to China. This is a big opportunity, but the country themselves need to counter that with, China is still a communist party, very bad human rights, and they're not allowed to say whatever against the governments, that kind of stuff. But as a business partner, if you don't worry too much about stealing the technology or copying things, and you want to really selling things into that, it's a big opportunity. So basically, that is from my view. I think I among a lot already, but I basically we just continue one more thing. The last but not least is this Alibaba with the Ant Financial, and we heard. The U.S. government, actually, some of the Senate, I don't know, one of the guys saying we should stop Ant Financial going ahead with IPO in Hong Kong, is in Shanghai. And the main reason the Ant Financial, which is 30% owned, I believe, by Alibaba, didn't come to U.S. for IPOs because the U.S. government, have the last couple of years been very Chinese negative, so to speak, and Alibaba doesn't want to be caught in that trap and getting sanctioned on it or whatsoever. So they actually go over to Hong Kong and Shanghai and basically in Asia to do that. But for the U.S. government, Senate, whatever, they come and say we need to stop this, stop this IPO. I mean, excuse me, how can American government stop an IPO that is running in another country, and that IPO and Financial basically running about 90% of the business internally in China, and some with external in the US and Asia, or kind of things, so it's apps or something. How can you stop that? I think it's just naive, isn't it? And the other thing is, people don't seem to think about is, or didn't report much, is who is actually advising this IPO in Asia? American financial company, Citigroup, JP Morgan's, Morgan Stanley, and they're poised to make around 300 million and maybe more. I was wondering how the U.S. government going to stop that with so much financial industry link, backers with the U.S. government. I think all they just noise, but overall, just like so much, unfortunately, anti-Chinese sentiments going around, and also how much the U.S. government has been, unfortunately, become a bully and a savior of the world, and that's very sad. Basically, that's enough of my moan for this week, and next is my update on my weekly portfolio come out next. Okay, first off the bat is Apple. Short term is changed from last week to buy to sell now. So short term is a sell, medium term is neutral, long term is also neutral. So basically, you see a slightly change of trend here. Things are slowing down and it's moving the other direction for Apple. Similarly to Amazon as well. Short term is sell, medium term neutral, long term is also neutral. So Apple and Amazon both are doing similar thing. Next is Australian dollar against US dollar. Short term is a sell, same as last week. Medium and long term still neutral. So it's stuck. This currency pair stuck between 0.70 to 0.72, that kind of things, and nothing much happening. While at the same time, you look at the US dollar index, it is relatively similar. Stuck within around 93, 94. Lately on Friday, I think get back down to 92, 70 or something. But it's still up there basically. Not really dramatically fallen yet, but something I sort of expected to. At the moment, I think there's news of the general election coming up in America. Everything just hold fire as such, but it's a small little telltale sign which I'm going to talk about a bit later on, sort of saying there's something going on here with the US dollar index. Next is Brent crude. Short term is a buy, same as last week. Medium and long term is neutral. For WTI, crude oil, US crude, same as well. Is short term is a buy, medium and long term is neutral. For crude oil in general, things are sort of slowly is going to sideways for quite a bit for some time now. Slowly, like a little arc, just go above the 200 moving average very, very slowly. But it's relatively quiet. It's up and down for like a dollar or two every so often, but it's still within that boundary. It's not much happening. But this is the time when things are get rather quiet, and then trend can suddenly start. So volatility is very low on this one. It's worth something to watch out. The dollar index suddenly changes, which I expected. So you'll see something dramatically happening, but we'll just have to wait and see for now. Next is DAX in Europe. Short term is a sell, same as last week. Medium and long term is neutral, so not much change there. Dow Jones, short term is still a buy. Medium term is neutral. Long term is a buy. On this one, if you actually look at Dow Jones, Nasdaq, and I think about S&P as well, we seem to have two tops happening, but the second top is not really making new high anything yet, but I think it's something worthwhile to look at. So I don't know what will happen with if Donald Trump get re-elected or Joe Biden. We have no idea what the market will react, so we just watch it out. Next is FTSE. Short term is a sell, medium term is a sell, long term is a sell now. So basically sell across the board. I mean, the continuation of COVID-19, partial lockdown or tightening restrictions of people traveling in the UK is hurting businesses. But if you look at the foreign currency, Great Britain, a British pound, is a bit telling you a different story. But as an index, well, naturally, people are not really working that well here, a lot of remote working, but small businesses are really hurting, high street is hurting, so is the house sellers, those kind of thing. So it's going down at the moment, so watch out for in UK basically. I don't basically hold my breath at the moment with the December coming, with the Brexit coming through, COVID-19, don't know what's going on, and I'm not sure if we are going to have Christmas or part of the country being locked down. Then I have no idea. Let's hope for the best. Next is gold. Short term is a sell, medium term is neutral, long term is also neutral. So on gold, tied up with the dollar index basically. It's still a bit disappointing, just like I said last week. But however, you have seen, this is just my view. I'm wondering if you try go have a look. It seems to having a bit of difficulty stay below 1900. It's tried a couple of times over the past month or two, stay below maybe in a day or two at around 1850, 1870, and then boom, go back up above 1900. Try to go higher. It tried. about like 1927, 1930 or something, and then boom, come back down again. So it basically is stuck between 1930 and 1850 or even 1870, just stuck within that maybe less than $100 range, and basically we just have to wait and see what happened. But as far as I'm concerned, it's more like consolidation side trade, and with I think once the US dollar start to move, there will be quite a bit of news going around from the gold side. But I definitely still trading on this one. Yes, in the moment, it's short term, it's a sell, but I basically keep a big eye watch out for this. Next is Hang Seng. Short term is in Hong Kong. Short term is buy. Medium and long term is neutral. So this one is slowly creeping up. Hang Seng is slowly recovering. With basically the Chinese index internally in China seems to be relatively slowly doing well, but we just have to wait and see how things are. Next is Nasdaq. Short term is a buy, medium term is neutral, long term is a buy. No change from last week. I think better watch out on this one, because if Apple and Amazon both changing, there might be something else to watch out for. So keep an eye out on Nasdaq. I mean, Nasdaq was out of the three major U.S. indexes, the first one that make the new high first and swimming across and above, but it seems to be hanging at the moment, not doing that. More of a side trade, that kind of thing, not going particularly anywhere, which is sort of fine as far as I'm concerned. It's like what Warren Buffett said. Short term, the stock market is a voting machine. Long term is a weighing machine. I mean, as we go forward towards COVID-19 getting more used to, so to speak, with rapid spread of it around second wave around the world, and how each individual react to it, and how to stop the spread of virus, and how it's indirectly affecting our lives through jobs, rentals, and shops closing down, access to things in general like hospitalities and stuff. It's hurting us in general. But a lot of us also work from home as well, so it's pushing a lot of technology shares sort of going up. But it can only go so far. At the end of the day, people are not. I mean, a lot of people are losing their jobs on benefits and stuff. This is no joke. So, like myself, the IT people, that sector seems to be holding up well. But then also our clients sort of like hold fire, not moving forward as much with new projects and stuff coming on. We might still hold a job, but then the telecom sector could be a bit stagnated at the moment. And all the IT systems. So I think the IT in general, the technology things, is not moving higher. For reasons, so just basically have to wait and see what happens. Next after that is Nikkei in Japan. Short term, medium, long term is a buy. So this basically is a change from last week when the S2, the medium term systems, Total System 2 has changed from neutral last week to buy this week, so buy across the board. So this one seems just slowly moving up. A lot of, not big movement, just slowly. It seems to be a lot of slow movement. Shares or crosses or indexes and pairs and going around at the moment. So this is one of them. Silver, short term is a sell. Medium and long term is neutral. Similar things for silver don't seem to want to come down much. So I think just basically relatively waiting on this one. I think silver is more of a little flag coming up now, to have a lower highs, but you still have the similar ceiling on top. So if you look at this little flag, you look at the chart. So I think that's poised to actually go, big bang or go straight back up or something. That sort of give you a solid leading, maybe a leading indicator as to where it goes, and also reflection on the US dollar. So we just have to wait and see. Next is the US dollar against Chinese yuan. Sell across the board, basically China's strength. This one I think I've seen it before. I just got to continue to say it again. Like I said in the beginning of the podcast, China, Xi Jinping actually went down to southern China for a celebration of Xinjiang 40 years, basically a special state just next to Hong Kong, and it's doing well, extremely well in my view. It changed from a very sleepy village into technology hub in China. People like, if you go there have a look, it's more like Silicon Valley kind of things compared to US, and it sort of shows how much you have grown in China in terms of technology wise and development wise. It's not much more high tech than before, very labor intensive, and slowly moving towards more of a high technology based, design based kind of activity, more high cost stuff than low cost technology stuff. So overall, I think China is what Xi Jinping also said as well, is more cater for internal consumptions, so driving by internal requirements. I mean, we have just over 1.4 billion people over there. I mean, even let's say 50% of them are technology savvy or in the middle class, whatever. It's a big huge market. You need to even just apply that. That's in food, that's in medicine, that is in education, that's in traveling, that's consumer goods and services, products, financial, education, everything else. So it in itself is maybe like its own little economy. In that one, does it really need to go reach out to other part of the world to basically say, please sell me things? I mean, China have, like I said before, learn from 2007 2008 when you found the export market is relatively thin when they're in recession. Nobody wants your stuff. This time, rather than recession, US is putting other countries to say, don't buy Chinese stuff, be it in technology, like Huawei stuff, or and other goods and services as well. And this is basically really hurting China internally, but it also means one thing. It is, like Xi Jinping say, internally, grow its internal consumption more. So it's rather buying things more. So if U.S. dollar is weakening against the Chinese yuan, that dollar basically the Chinese dollar strengthening. That means they can buy things more when from outside world, because they need to cover its own internal consumption needs anyways, much of which can be done internally, but a lot of things can also need to be purchased, bought in from other countries. So with most things in US dollars term in US dollar, the Chinese yuan is strengthening. That means they can buy more stuff with a cheaper price, so to speak. And doesn't necessarily have to be from America. I mean, Europe, Southeast Asia, or Latin America, or Russia. It can be anywhere. But it basically strengthening the Chinese yuan is helping behind it, not just what Xi Jinping wants as internal consumption driven kind of market, but also remember China is the biggest creditor in the world. Okay, it might not be the biggest U.S. Treasury bond at the moment. But Japan is at the moment. But at the moment it has a lot of saving. I think the second largest. It used to be the first, but it basically for the past 12 months or so has been selling U.S. Treasury bond. And with Chinese government history, they are very savvy when to sell the U.S. Treasury bond at near the top market and buy them at the bottom of the market. That's from the past history, but it seems to history might be moving forward that way, that China see U.S. dollars crumbling. But of course, there's also, because of the trade sanctions and COVID-19 spat between U.S. and China, so it is selling down U.S. dollar anyway, but probably not in a fast pace, but slowly it is doing, slowly coming down. And Japanese government seems to be picking up the pace, buying more U.S. Treasury stuff. So we just basically have to wait and see what happens here. But it does have implication here with China, and also China's been buying, not just saving. The Chinese people have a lot more savings compared to what it used to be before, just similar compared to Japanese saving are so very high, but US and Europe in general has been very low on savings. So China has been buying lots of gold, just like Russia. So it is relatively, financially it's relatively stable, and for yuan to have a very much of a, in my view, the necessary structure for a strong yen, and with the government push that way, I think it will continue, and US dollars and other currencies will be weaker against the Chinese yen as well. So something worth looking into. Next is US dollar against Japanese yen. Similar thing. Short term is a sell, medium and long term is a sell. So same as yuan, Chinese yuan, but it's also it's strengthening, but not sure is it strengthening because it's fight for safety or what. but Japanese yen has been slowly strengthening ever since the prime minister sort of changed personnel, so to speak, in Japan. Next is British pound against Japanese yen. Short term is buy, medium long term is neutral. Now also is British pound against US dollar. After that is short term is a buy. Medium term is neutral. Long term is now a buy now. So if you look at British pounds against US dollars and against other currencies as well, you sort of see that US dollar definitely is weakening. And like I said just now, so you go euros, Chinese yuan is strengthening, Japanese yen is strengthening, and your British pounds again, US dollar again is strengthening. It's gone above the 1.31 area. In the backdrop, even though the economy is not doing great, but the British pound seems to be slowly moving higher. So I'm not sure is it really a British economy driven. I think it's more like the exchange rate with US dollars is hardening, so to speak, and US dollars is weakening, and that's what we actually see. So watch out for US dollar weaknesses, mate, and it probably will. In my view, is reminiscence of what happened maybe back to 1987 or something, whatever, or 90 something, when the collapse of the Asian currency, that kind of thing, and as well as what happened after 2007 when the currency around the world is weakening and US basically gone down the pan first. But this time, both Europe and Japan have got put the interest rate not just to near zero, but actually got negative, and US dollars haven't done that yet. So the race to debase their own currency within those countries is don't know how that affect the world lately going to be, but it's something that I can sort of foresee is that with the weakening of US dollars and strengthening of other currencies in Europe as well as in Asia, with China seems to be in a driving for buying things. So China economy already gone up, but other economy, because of COVID-19 recessions, whatever you name it, the slow recovery of COVID-19 will probably suffer a bit. Slow trade happening, but I think overall we see a lot more Chinese market going better for trading as well as consumption wise, whatever. So all those companies that supply to China probably will see a better day. So if you look at target those companies, have a research and have a look, I think you'll probably find quite a bit of golden nuggets there. So probably like a two-tier thing. When the rest of the world is recovery, China and Southeast Asia in general is just pulling ahead and it's moving forward and forward. And I think this time, rather than China, saving the world, China is saving itself and bring its partners, the willing partners who are willing to work with it, and strengthening itself, as President Xi Jinping says, and keeping itself healthy. And then if its partners are willing to do trade with them, work with them, they probably also benefit as well. So watch out for that. Next is Bitcoin. Well, basically, Bitcoin's buy across the board this week. Slight improvement from last week. So last week I already changed the style on Bitcoin. It's like short term and long term is buy, medium term is neutral. This time round, medium term is also neutral, from neutral to buy as well. So buy across the board. So back to Bitcoin, basically broke about the 11,000 mark. Now it's I think 13,000 or something. So slowly moving up there, but it's taking a little pause. But it is doing well, so we just have to wait and see how things go. Ever since from about 9,500 is up there. The 11,000 seems to be selling for a while, but now it's broken above it, and it's time to continue long, basically on Bitcoin for now. Next is iShare 20 TLT. This one I really want to have a look at. I mean, it's from my view, from my system, it's telling me sales across the board. I sell for short term, medium, and long term. Now, that's against the backdrop of all the indices around it, especially in America. They're not making new high. It's high compared to what the real economy is doing. Like Dow Jones, for example, is still around 20,300, let's say 20,000, when half of the country more or less in lockdown, people are not working, kind of thing. How the economy actually doing? I don't, I'm just same as UK. It's not that great. But people probably then might be, okay, go to bonds or something safer. So bond price is supposed to go up, but unfortunately it's going down, and people are buying a lot more shares. Now, you telling me all this increase in Dow Jones and stuff is because, the U.S. Fed is pumping lots of money, like I said before, into the economy. But at the end of the day, like Warren Buffett said, it has to more like a weighing machine at the end of the day, initially a voting machine. And this year, perhaps it's also driven largely also by the election, U.S. election. So normally it's up year for that one, so it looks like it will end that way. But it doesn't boil down that well to next year. But for that, it's sort of like bond is going down, but I would expect if the bond market is going down in prices, in this case the ETF, TLT, I expect Dow Jones, Nasdaq, and the S&P 500 go up, continue to go up. But it's not doing that at the moment. It's gone sideways. Okay, you might say because of U.S. election, it goes sideways a little bit until the way is clear. However, TLT, the ETF seems going down and continue going down. Now it's below 200-day moving average as well. So probably a little more rebounds later on. But I think if it's discontinued, that's also tell you a story. That means people don't want bonds. They don't want to. Therefore, the bond prices, is it going down in this way? Yeah. So less and less people want it. So that means what? They have to provide more interest rate, high interest rate for attracting people going in. I'm not quite sure. It just doesn't feel right. It's a bit odd. So better watch out on that one, because normally when bond price go down, the stock market should go up, right? Because people don't want to buy bonds, go into a bit more risky things like buying, stocks and going to stock market and get more money. Because bond in general at the moment, we all know the interest rate are relatively very, very low. It's not much point keeping it, but to actually getting out of it, and the general market is not doing that well as well, I'm not quite sure. So we just have to wait and see. Next, last but not least, is Tesla. It's buy across the board, so short term, medium, and long term is all buy. The thing is, people might like both Tesla and Apple. After the split seems to have, gone a bit sideways a bit. It has make a major move after this split, and it gone quite high, and then come back down again. It's gone sideways. Apple is slowly going to short term negative. Tesla is still there, but one thing though from Asia is that people are talking about, I think I talked about it a month ago, and it's also continuing now. If Tesla is doing so well, why does it have to reduce its prices? It's worth thinking about that. I mean, Tesla is a great company. As far as I'm concerned, it's more than a car company. It's a software company, it's an AI company, and precision driving, all this, and also a battery company, come all together. But does it really have to pay that much of money, these high prices? I'm not quite sure. And if it's selling his car well, why the hell it has to reduce prices? That to me basically only mean one thing: the market is not actually shifting their costs as much as they want to, so they reduce the cost, and now they also that affect them in Asia. Well, I'm talking about the news I read all this about is from Hong Kong, and they see the figures sort of coming out with the friends from China buying Tesla as a reduced price. So yes, the COVID-19 is affecting China, you can say, and therefore people can spend as much, therefore, it reduces. But remember, Tesla is building its factory and building Model 3 in China, and they actually have the advantage of, taking tax deduction and incentive-wise things when they build in China. That's the whole reason, in my view, they go to China and manufacture, is to escape from the U.S. trade problems, tariffs, as well as the extra taxation that the Chinese government put on cars, importing cars and stuff like that. So if they actually and also take advantage of the lower taxes and benefits of actually having a Chinese manufacturing there, Chinese-based manufacturing there, instead of importing from US, for example, or Europe. But it does tell you something that the world the economy might not be as good as what the stock market is showing you. So at the moment, it's just going two ways. So something, or to think about. However, the next 10 days, 15 days are going to be driven by the U.S. election. I still think, however much I don't like Donald Trump, I think he probably still might win. But let's see how it goes. Even if he loses, I think he'll be a bad loser. You just go to counting the vote, that kind of thing, unless there's like a landslide at the very start when things start being reported. Yes, there's also a high level of people coming out to vote. There's Donald Trump's way of devising the people in America, so to speak, racism, that kind of things, and stirring up trouble a lot more than other U.S. administration done before around the world, to both to his friends as well as to his enemy, tearing up contracts and agreements and then make a new one, so only to see that there's not much change except Donald Trump's seals on it. I don't think it's very happy for everybody else, especially internally within the U.S. So people come out and vote, but a lot of people might still, this election date, voting day might coming up from the I think 3rd of November. They might just come out and vote and see how it goes. And it's still, to me, it's still hard to balance. But I think the late news from Joe Biden really helps it, and also help him, and also the COVID-19 thing, that he actually went into hospital and come out so quick, like 3 days, that kind of thing. I think personally, because it's everyone's American government job to get Donald Trump safe and well again after COVID-19, I think they probably have given him some experimental drugs that have a high rate of working, possibly working, and Donald Trump come back out in 3 days, but it's not ready for general consumption yet. So they probably still under testing. I think that's one of the reasons why it came out so quickly. Unless I'm totally wrong, just faking it. Who knows? He's a big news manipulator, but we just have to wait and see. But definitely next 10, 15 days is U.S. election, and it's going to drive the market volatilely, up and down quite a lot. And U.S. dollar index go up and down, and so is the indexes. And like I said a couple of episodes again, CME group, basically the market is ready for for the future markets and stuff to allow a lot more volatility during pre-market time or evening time. So I think everybody is knowing that there's going to be a lot of ups and down volatile market for in about 2 weeks time, when basically Donald Trump and Joe Biden go head to head in the voting booth, and just we have to wait and see. That's the end of my podcast, and I hope you like it, and I will speak to you next week. Bye for now.